Yeah, welcome, folks. So we're talking on PGR metrics. So we're saying something about premium level and discount level. Yeah, price going up is going for a premium level, then price going down is going for a discount level. A liquidity resting above or below, any inefficiency resting above or below. That's what makes price move up or down. It's going to seek for a liquidity resting above. If it's going down, it's going to seek for a liquidity resting below, or any inefficiency above. If you are buying, then any inefficiency resting below if you are selling short. Okay, here on the weekly chart, here on weekly chart, yeah. If you are trading, or if you want to analyze, first of all, you have to come to your weekly chart to see the liquidity resting above or any inefficiency where price is heading to. Yeah, like we have here, this shaded black area is, you can see the space there between this candle, Monday 21st February 2022, the low of it where the body closed, the low of it where the body closed, and the high of this candle, Monday 28th February 2022, the high of it, the body, the opening of the body is a bearish candle. So we open from up and close down. We open and close down. So the closing of this candle, between the closing of this candle and the opening of this candle high, you can see the space, the gap there. There is no candle body that closes it. It's empty. So it's a void. We call it volume imbalance. Volume imbalance. Call it volume imbalance. It's a void. So it's empty. Price will come and fill it back. Volume imbalance. Now you can see how we traded and delivered inside the volume imbalance. The body closed at the 50% of it. To get the 50% of the volume imbalance of the void, use your Fibonacci. You anchor from the opening of this candle to the close of that candle to get a 50%. So the line you see there, the blue line, is our 50%. Yeah, we placed it at the 50% line exactly. You can see that's where the body closed. The 50%, the half of it of any inefficiency, is a major resistance if you are bullish. Then if you are bearish, it's a major support level. Okay, you get that. That's consequent encroachment. The half of any inefficiency, consequent encroachment. That's where we traded last week. This is a last week candle. Because we are in weekly. So each candle you see here represents full week from Monday to Friday. From Monday to Friday, each candle you see here, because we are in weekly chart. That before you analyze your market, you first of all go to your weekly chart to see where price is heading to, going for any liquidity or inefficiency up or down. Now we have delivered into this void and inefficiency. We took out the buy side here. We took out a buy side first, then another buy side here, second. Here is a buy side liquidity. Last close candle of the bullish, last close candle. Here is high. lower high. So we took out the two buy side liquidity, then deliver into the consequent encroachment of the volume imbalance. This volume imbalance is a major resistance. It's a major resistance. It's a void, it's empty. So price have come and deliver and fill it up. It's no more a void now. It's no more a void. We are delivered inside it with a candle body to the 50% of its consequent encroachment. Okay. So when you are analyzing your market, you first of all go to your weekly chart. Go to your weekly chart. Yeah, it's your weekly chart. So you see where price is heading to first. First of all, you have to have narrative of where price is going. So that will enable you to know where price is going next. Then you anticipate price action. So you go down to lower time frame and see price action where to for your entry. Your entry shouldn't be in weekly unless you are a swing trader. As a day trader, your entry shouldn't be in weekly. You have to go down low as 15, 5 minutes, even lower to 1 minute to see your entry. Like as we have delivered inside here, you just go to lower time frame to see a chart pattern or any strategy or model if it's likely to form at this shaded area, then to enable you to short, okay. So as we are delivering into the half of the volume imbalance, price will now seek to another liquidity or inefficiency. That's discount area. Here is our premium area up. Then price will seek for any inefficiency or liquidity below discount area. Below is discount area, above is premium level. So we trade from premium to discount, or discount, can see here is a discount area fair value gap to a premium. You see it, that's the it's algorithmic trading, purely algorithmic trading. So we trade from premium to discount. Now that we have delivered into this volume imbalance, you can see how quickly price drop. Yeah, price drop. We left the volume imbalance, then we drop. Here is a little fair value gap between this candle here and this candle high. There's a fair value gap there between this candle and this candle. Yeah, it's a fair value gap. It's an inefficiency in the market. It's an inefficiency. You can see there's a gap there between this candle weak low and this candle weak high. There's a space there. It's an inefficiency. So we have violated it. That will show you that we are going to sell. So here in weekly time frame, where is the next liquidity resting below? Is here. That is the next liquidity resting below. Set side liquidity. That is our next liquidity resting below price. So coming upper week months, we'll be anticipating price reaching falls at this set side liquidity. Here is the low, the last close candle before this movement to deliver into this void, this inefficiency. Here is the low before this movement here. So as we have violated this fair value gap here, it's now inversion fair value gap. Price have violated it. It will now stand as inversion fair value gap as a major resistance because we have violated it. We have trade and close below it. So it's now turned to inversion fair value gap. it will now stand as a premium level. Okay, it's now stand as a premium level. So we now, if we should open next week, coming week, and trade into it, it will stand as a premium level, as a resistance to stop price, to resist price from trading up. Here is order block. Now we created order block here, last close candle. You can see the small candle and the big candle. This bullish candle here, last close candle, we wouldn't want to see price trade above it. Here is our last close candle, the opening, the opening of the candle. Place it as your order block, bullish order block. So we like to see price deliver into this inefficiency coming upper weeks. Then we like to see a rundown to take this liquidity or deliver into this inefficiency. Here is an inefficiency between this candle high and this bullish candle low, the opening. There is inefficiency there, standing as a discount area, below price, discount area, above price, resistance, that's premium. Yeah, it's an inefficiency, CB, fair value gap, BC, buy side imbalance, sell side inefficiency, buy side imbalance, sell side inefficiency. Yeah, so we'll be anticipating price coming upper weeks months, coming months or weeks. Yeah, for the how many months remain. So maybe November time to deliver inside this inefficiency. So the major reason why price go up is to go and seek for an inefficiency or a liquidity. Here is a liquidity, we have taken it. The last close candle high that generated formed this movement, that created this movement, this range. Then we took out a sell liquidity in weekly. Then after taking a sell liquidity, we went and took out this buy side liquidity and swept it, we purge it. So price will now seek for liquidity below, resting below. Since we have taken a double liquidity, here is a liquidity, here is also a liquidity. So price will now seek for any inefficiency or liquidity below price. Yeah, that's how this algorithmic trading. Okay, so that's PDAR matrix. PDAR, that's premium discount areas matrix. Premium discount down, premium above price, discount below price. So we trade from premium to discount or discount to premium. So you have it in mind. Okay, yeah, go down to daily. Yeah, in daily, in our daily chart, this shaded area inversion fair value gap in the weekly time frame. Here is our order block in weekly. You can see it's also order block here. This order block in daily too. Then we break above a market shifting structure. That is a market shifting structure at the body. We took out a liquidity. Then in weekly time frame, we took out a liquidity too here, and the other one I took out here. So price is coming to seek for this low, this liquidity here to exercise liquidity here in daily, like a primary sell side liquidity before seeking out the low of weekly. Then we have an inefficiency here too. See this gap, here is a breaker. So coming months, we are anticipating price delivering inside this inefficiency, taking all these loads. We have this is buy side delivery, so we are in sell side delivery now by taking all the sell side liquidity resting below. That's discount areas. Below is discount, above price is primo. We have delivered into a weekly volume imbalance. You can see in daily here, in daily, here is a buy side liquidity. That's close candle, almost higher high, equal highs. So we are seeking out for liquidity or inefficiency resting below price. This is a market shifting structure. After a market shifting structure, displacement, call it displacement because here is a previous low before this movement here to deliver inside the volume imbalance, the weekly volume imbalance. Now we had a displacement that took out the low, that shifted the market structure. Then we created a fair value gap here. This candle here, high, low, and this candle last week, candle, high. There's a gap there. This gap, there's a gap there. Call it fair value gap between this high and this low. You can see that gap here in daily chart, and we had a displacement that shifted the market structure and then created a fair value gap. So coming weeks, months, we like to see price deliver into this. Why here this inversion fair value gap is our weekly inversion fair value gap. Then we had another fair value gap, CB, sell side imbalance, buy side inefficiency. That's CB high, sell side imbalance, buy side inefficiency high. Then here sell side imbalance, buy side inefficiency low, CB. Okay, so we are anticipating price to deliver inside this fair value gap. Then we see a rundown to take this liquidity below on. Yeah, these are breakaway gaps. It can be reclaimed. So we are anticipating price once deliver inside this fair value gap, then we will see a delivery, a sell side delivery, taking this low, then deliver into this weekly. This is our weekly, this yellow shaded weekly fair value gap BC, this shaded area in our weekly, deliver into it. Then coming weeks, months, we will see price delivering into this inefficiency here, this inefficiency. Okay, you take your time and study price action. Okay, yeah, wish you guys a wonderful weekend. You practice, make sure you practice, make sure you keep practicing. You practice, you back test, you don't stop practicing. Okay, you be dependent on your own. Don't always rely on the teaching. You have to challenge yourself. You have to challenge yourself and study price action. Okay, you guys be safe. Yeah, thank you.